watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi. And for now, it doesn't look like the market is in a great mood at this point of time. And I say that because we were comfortably around 19,500. We were looking at scaling those all-time high levels, but no, that's not the case. In the last 1 hour or so, we have cooled off a bit. It's not a fall from grace or anything. We're still holding on to 19,450, but just lacking that momentum at this point of time. Autos, however, are doing all right. The good part today is that Eicher Motor has also bounced back. There are a couple of brokerage notes that have actually upgraded the stocks. The like of ICICI Securities would say that the stock has been beaten down quite a bit, and probably it's now a time to warrant a buy on Eicher Motor. So that stock definitely is holding up in the green. Metals and PSUs, which were doing quite well yesterday, are seeing some sort of profit booking. So a bit of a down day coming in for metals and PSUs. But it's a great day if you have defense and industrial in your portfolio, because whether it's a Garden Reach or a Mazgaon Dock or a Bharat Dynamics, all of them are doing quite well in the trading session, and even the industrials likes of ABB, Siemens, L&T, they're all firing away. What's not firing away is IT. You have HCL Tech, which is going a bit weak into the numbers, and TCS2 very, very soft and tempered ahead of its earnings. Of course, both of them are tomorrow post markets, but the street has started already factoring in the numbers per se.
Yeah, and TCS is actually seeing quite a recovery from the from the way it started off in trade, was well in the red, and from there it's recovered quite a bit of ground, although now once again cooling off as we speak. But car trade, that's the other one which is in focus. They've entered into an SPA with Sobek Auto, looking to acquire 100% stake from them, from OLX India, that is, and the acquisition is for a consideration of 537 odd crore rupees. So that's one stock which is in focus, holding up by about over 15% as we speak. And Anisha was just highlighting the defense names. There's a Phillip Capital report coming in, saying that the stocks are still very much favorably placed, and the opportunity pipeline stands as mammoth as $110 billion spread over 6 to 8 years. And saying that the favorable policies with highest priority for local manufacturing, that's only going to aid the sector going forward. So, of course, this is one pocket which is holding out very, very smartly as we speak. Remember earlier in the morning, we told you about the world's fifth largest agrochem producer. That's FMC, and the guidance cut. That's surely rubbing off on UPL. It was from the word go, and it hasn't improved anything from there. So UPL rallies, those stocks are still reeling under pressure as we speak. But the rest of the market holding out okay, not quite at the session top. But we're still higher by about almost 0.5% and still circling around that 19,500 print, at least for the Nifty futures. So let's welcome on board our chartists and figure out what they're making of the trading temperament right now. Kunal, Naresh, hi, afternoon. Kunal, each time we think that the market would consolidate or should consolidate, it proves us wrong and shows a spurt. You think we will once again make a dash to that all-time peak of 19,005K?
Good afternoon, Aisha. So I think we are still consolidating. We have not broken past about the 19,500 mark, and we have not broken below the 19,200 to 50 level, which is a strong support for the Nifty. But on the other hand, I think the second or other sector index, which is Bank Nifty, that is the point of concern for the markets right now, because over the last 6 trading sessions, the Bank Nifty on the hourly chart has been making a pattern of lower highs and lower lows. And that is not a good sign for the bank index as such, because when you are into a consolidation, you would probably expect that the bank also, or such other indices, they would go through more of a time-wise correction rather than any formation of a lower highs, lower lows. So that's the only concern for the markets right now. I would still believe that till the time the Bank Nifty underperforms, we could get into this drag or a consolidation for the indices, and the Nifty could remain or continue to remain in a range. I believe unless we break past about the 45,000 mark, 45,200 on the Bank Nifty and close about those levels, the Nifty would also consolidate. From the short-term perspective, I think the trade or the bias for both of the indices is on the low trade side. I would still believe that it's better to wait out for a breakout, because you don't know how much time the indices will consolidate. So from a short-term play, I would wait out for the indices to break past about their respective resistances, only then initiate a buy.
Naresh, where would leadership come in from? Because, that's seeing faster rotation than the overall market trend itself. I mean, yesterday it was Reliance in metals, and today you're struggling to pinpoint any one particular trend. It's a bunch of telecom, cap goods, realty, and I even spot some of the auto and pharma healthcare names in there.
So the leadership is clear in terms of auto being a leader. that's a sector which is doing well. And we are seeing new names come up, which is where Maruti is coming up in the list. You have a Hero MotoCorp, which is doing well. And you have Ashok Leyland coming up in the list. The only problem is the sector does not have a very high weight on the index. The high weights continue to be financials, which is where, again, we are not seeing any momentum coming in HDFC Bank, or even a Kotak Mahindra Bank. ICICI Bank continues to be around that 940, 950 mark, not able to cross 960. But going forward, ICICI Bank, if it breaks 960, that could be a leader. Reliance Industries has shown a leadership structure by making that move about 2700, 2750 mark. So Reliance could be one, which is where the weights are also high, at 10% plus weight on the index. So Reliance is one which could drive the index going forward. And we could continue to see this rotational moves wherein we've seen autos do well. If the numbers come out for IT well, they could see some bit of a bounce back selectively. So for now, we are not seeing a move. A leadership move is when we could be looking at 1,000 pointer on the Nifty, 500 pointer on a structural basis. We are not in that move as of now. So we are in this consolidation phase, 19,200 to 19,600. So this is where you continue to play sectoral rotations, stock rotations.
In Reliance as well today, as you pointed out, that stock is the top gainer as far as the contributor is concerned for the Nifty. You also have Infosys, which is actually doing quite well. The rest of the IT pack, not as much, but Infosys alone is quite excited ahead of HCL Tech's and TCS's earnings. So that stock is high by 1.5%, followed by ITC. And look at Sun Pharma as well. That's been fairly quiet of late. Today it's perking up as much as 3%. So definitely some excitement build up, and we already flagged out Eicher Motors and Maruti, which are doing quite well from the auto pack. What's not doing well is clearly Bank Nifty. Let's pull up the intraday chart and see the candlestick at that. If there are some red bars that emerge there, because in the last few minutes there has been a sudden drop. It's obviously Axis Bank, ICICI Bank, SBI, these are your top losers. Kunal, as far as the Bank Nifty is concerned, which do you think is the weakest link? Because we actually were preparing ourselves for quite a bit of excitement over the next couple of days as HDFC, merger impact really comes through. But for now, the index and its constituents are fairly quiet.
Well, yeah, Anisha, and I think you rightly pointed out, because the large cap names like ICICI Bank, Axis Bank, HDFC Bank. Now, if you look at the price performance for all three of the names put together in the last, maybe 1 week or 10 days, they've been absolutely sideways. ICICI Bank, I think, has been just fluctuating at this 950 mark, plus or minus 20 odd rupees. Axis Bank had a touch and go moment towards that 995 mark, came very close towards the 1,000 levels, but then it slipped some 30, 40 points from those levels, and now back towards the 960, 970 mark. Even HDFC Bank has been in a stock which has seen a lot of selling at the 1,700, 1,750 levels. So the concern for the Bank Nifty is these private sector names, which is underperforming. Even the likes of Kotak Bank, for example, has been struggling, and I think the struggle for Kotak Bank has gone back into the last 2 to 3 years, if not more. So the large cap names not participating is definitely not a good sign for the bank index overall. But I believe that eventually these stocks, once they end their phase of consolidation, they could start to participate on the upside. As of now, these stocks are consolidating. But on the other hand, the bright spot for the banking names is actually the PSU banking lot. You look at the price performance for the mid-cap end of the PSU banking names, Bank of Baroda, Canara Bank, look at the charts for PNB, Union Bank, etc. These stocks have done exceptionally well in the last 1 week, 7-8 days. So I believe that it's always better to go with momentum, as well as the play where the sector performance and the price performance is much more stronger. Within the banking pack, as of now, it's the PSU banking lot.
Just wanted to talk about a few other buzzers. Bharat Dynamics up 14%, Cochin Shipyard, Mazgaon Dock, Golden Reach. Aisha was just talking about the Phillip Capital note, which says that there is more upside, quite a bit of opportunity. Nuresh, do you concur with the view? Technically, chart-wise, would you still be a buyer in these names, or would you wait for a correction?
So one could start off with some allocation and be ready to add on the lows, because the stocks are up 10%. So out here, we've seen Mazgaon Dock has gone beyond the risk-reward range, but Cochin Shipyard is still away from the previous all-time highs of 680. You have Garden Reach Shipyard trying to make that breakout move into new all-time highs. So these two names look interesting in the basket. So out here, one could look at GRSE as well as Cochin Shipyard. The rest of the names have already moved up quite a bit. So still the trend is strong, and when the trends are strong in a sectoral way, it continues to surprise on the upside. So out here, that's what is happening.
Couple of other buzzers in trade, and we've been mapping how the likes of the IT plays are actually moving ahead of their numbers. TCS as well as HCL Technologies are not quite moving all that well. They're definitely lagging, as is the case with LTI Mindtree. Ever since its news of inclusion in the index to replace HDFC came about, you had already seen a fair amount of run-up in the stock, and since then you're seeing some amount of profit taking take place. But today the outliers, like Anisha was just highlighting, is Infosys and Emphasis. Bring out those intraday graphs. Both Infi as well as Emphasis will just come up for you on your screens. Both those stocks are holding out quite well as we speak right now. Kunal, trade or no trade on any of the IT names, given that we're just very close to the biggest trigger, which is going to be earnings come tomorrow?
Well, I would not trade the IT stocks pre-earnings, but post-earnings, yes, Aisha, I think, whichever way it is, whether it's Infosys, which is up maybe, about that 1400 mark or closer to 1400 levels, or whether it corrects back towards the 12, 50, 1300 mark, whichever way I think, the IT stock moves, I think it would be a strong enough confirmation to go for a buy, because at 1400 plus mark, the stock would come back into a zone of a breakout, filling out that major gap which had happened for Infosys, I think, 2 or 3 months back, when the stock in the previous quarter results had fallen more than 8 to 10%. And on the way down, in case if it corrects back to that 1250, 1300 zone, that could actually be a good point where the risk reward may start to become a lot more lucrative as well as attractive for the IT major. So I would definitely look to trade Infosys post results, but not pre results.
Coming in fact, let's do one thing. Let's quickly take a short break on the show. When we come back, we'll track rest of the market action.
Back with closing trades right here on ET now. We're still awaiting details on what the Chief Justice would say in the Adani matter in the Supreme Court. Remember, the hearing is currently on. But we are also talking about some of the buzzers, and we've got the management of Premier Explosives joining in on the show right now. Mr. TV Chaudhary, the MD, is on the line with us. Mr. Chaudhary, great to have you today on ET now. What a blockbuster performance from your stock price, right? It's hit that 20% upper circuit. Help us understand what, by way of business, is really, or rather, do you think could be triggering this kind of up move?
Yeah, good afternoon. The trigger is, as you know, that the new orders which we are receiving continuously, that orders coming from defense and export orders from defense products, that has triggered the growth of the company, and then we think this will sustain the future also in the same manner.
Quickly talk about these two recent orders that you won to the tune of about 550 crore rupees. Could you spell it out? Where are these orders coming in from? When would they reflect on on your books?
These are orders received from Indian Air Force. These are for the countermeasures, which are very important for Indian Air Force. And due to Atmanirbhar Bharat of Prime Minister of India, these are awarded to us as the only Indian source for this, and qualified supplies and qualified source for these products. And we'll be completing now. Only 8 months are left in the current financial year. So we'll be doing something like 50%, around 50% in the current financial year, and balance will go to next year.
Chaudhary, could you talk to us about what will it take your total order book to? Because I understand it was close to 500 crore rupees in the month of March. What does it stand at now? And given that 50% of the execution of this large order will happen this year itself, what kind of revenue should we expect? Because last year you clocked around 200 crores on top line.
No, including the present orders received today, the order book has risen to 1100 crores. And as I mentioned, the current financial year is 8 months left in this, and we'll be doing around 50% of this order we'll be executing in current year. And the time given for this is 12 months for execution. And in addition to this, other orders, export orders, and all those will parallelly continue to be executed.
No, sure. So, Mr. Chaudhary, what does it mean for business in terms of, let's say, the full year FY24? What could be the total revenue that you clocked this year? What could the profitability look like? Because last year, if I have your numbers right, it was 200 crores on the top line and 7 crore profit.
Yeah, the current this indicate around we'll be doing around 500 crores in the current financial year. That is the target we have with the orders in hand and all those. And as the commercial explosives stabilized and the prices of raw material have stabilized, and also more and more defense orders coming in, we definitely feel that there will be a better performance. And in terms of turnover, we should exceed 500 crores. And in terms of profitability, I think we should be in the 18 to 20% range.
Let you go on that note. Impressive commentary coming in there. 18 to 20% in terms of margins, more than doubling of the revenue to almost 500 crore rupees. No surprise then that the stock is locked in upper circuit, 20% higher. Remember, Premier Explosives is a play on the entire defense sector, given 60% of their order book right now is in defense. In fact, talking about defense and the whole host of other sectors which are buzzing, let's welcome on board Rakshit Ranjan of Marcellus Investment Managers as well. Rakshit, hi, let's begin by talking about the defense space itself. We all know the kind of potential it has, the opportunity size, etc. But do you really think A, it will materialize, and secondly, is it not priced in already?
Yeah, I think the opportunity is good. As the previous speaker, the management team was talking about it in terms of why the opportunity is growing bigger. So opportunity is good. Whether it is priced in or not, that is a company-specific call that we have to take. There are certain companies where this is a flash in the pan in terms of ability to capitalize on the opportunity, for which you're right, it might be priced in, but there could also be several other opportunities from a bottom-up perspective to invest in companies where this is an ongoing structural a sort of tailwind rather than a flash in the pan. So stock specific wise, perhaps you'll have to go. But the opportunity is there, and in some areas it must be getting priced in. Yeah.
So talk to us about some of those opportunities. Are they emerging more on the manufacturing side, the entire EMS vertical, defense-wise as well? Is it a specific PSU name that you like? Is it the naval-based companies? Any way you can help us dissect in terms of the entire sector where the value is?
Yeah, I mean, we are looking at a few areas ourselves, not yet, I would say, fully convinced on any specific name that we can talk about, but not so much the PSUs. Elsewhere in the sector, there are some possibilities of finding an opportunity here.
Okay, Rakshit, that point is taken. Let's also talk about financials, because that, of course, is the biggest pie right now. What's your take regarding HDFC Bank? Because I remember speaking with Saurabh many times, and he's been a perennial bull when it comes to the likes of ICICI Bank, HDFC Bank, etc. Do you think it will re-rate once this event of merger is past us?
Yeah, no, I mean, to begin with, we have HDFC Bank as a stock in our portfolios, for our clients' portfolios, even in our family, as a disclaimer. So we are quite positive on the prospects of the bank after the merger, and there's significant synergies. At the very least, I would say the biggest low-hanging fruit that the bank has after this merger is sort of unlocking of resources which were locked up to drive a short tenure book. Now, once the tenure of the book becomes longer instead of the short tenure that it had prior to the merger, immediately the runoffs become slower, and the disbursements to grow at a certain rate of loan book, they have to be a little slower rate of disbursements for the same run rate of loan book growth. So that unlocks a lot of opportunity in terms of redeploying resources in more productive areas than what was previously possible before a massive loan book oriented towards long tenure home loans was available to HDFC Bank. In addition to that, there are massive cross-sell, upsell opportunities from the broader group that will act as synergies. So we are actually quite positive. Yes, the recent quarters deposit growth was a little more muted, but other than that, I think the loan book growth was pretty robust, pretty strong, particularly retail and SME. And going forward over the next few quarters, as the benefits of the merger come out, I think you should see a far stronger institution here than what was the case prior to this merger.
Rakshit, curious to know, what are you making of the two-wheeler space now that Eicher's dominance is going to get challenged by Bajaj as well as Hero?
Yeah, no, it's a very interesting space. I would say at the moment, as far as we are concerned, we're working on it with an open mind to understand in which direction this goes. But this is a competitive intensity ramp up that you shouldn't ignore as an investor. Aisha was doing exceptionally well, but what's happening with particularly Hero, the Harley Davidson angle, and overall competitive intensity rising in the last couple of months, it's something not worth ignoring. But yeah, we are working on it. As of now, not made up our minds in which direction, who will be the winner eventually from this.
Right. The other one I also wanted to talk about is as to Maruti's now entry into the SUV or MPV segment, call it what you may, with the latest Invicto launch. And then, of course, Tata Motors, given the kind of stock performance that it's been having, and not just the domestic business, but globally as well, JLR sales are on the uptake. Within the PV space and the four-wheeler space, what is it that you're liking?
In the passenger vehicle space, in fact, four-wheeler space, we don't have any of these stocks under our radar, precisely for a simple reason that they all see their phases of good products, good designs coming out, but the follow-through is not so great. And end of the day, when you consider, say, pricing power of one four-wheeler manufacturer versus another four-wheeler manufacturer, the pricing power, it tends to exist for relatively shorter pockets of time, rather than we having been convinced that there is any player here where if its competitor, let's say, offers a 10% extra discount to the dealers or 10% extra margin to the dealers, then this particular player will not be affected adversely on either profitability or market share. If you go by the pricing power definition 101 like that, where, for instance, just to give you an example, some of our portfolio companies like to a Tanishq, it doesn't matter as much if some of their competitors are offering lower making charges, but to some of the four-wheeler owners that you talked about, it matters a lot if their like-for-like competitors are offering say 10% extra dealer discounts, to take an example, and hence. I think we've tried to stay away from the four-wheeler space in most of the portfolios, barring I would say Maruti, which we've had under coverage, which we still do have under coverage, but we don't have the broader space too much of interest there.
What's your take regarding the entire NBFC and home financing names? Because I was just going through ACP portfolio, quite a few financiers in terms of Aavas, Home First, Chola Investment, and even otherwise, quite a few names from that particular vertical. Explain to us the rationale and why, specifically these names and not the rest, and what about the microfinance angle, because that seems to be coming on investors' radar as well.
Yes, no, this is a very exciting space, and as you rightly picked up, we have quite a few companies from this space under our coverage. Right from the top, I would say the Bajaj Finance, the largest NBFC, down to some of the other names. We have exposure in our portfolios, our clients' portfolios, our families' portfolios, etc. The attraction here is that to begin with, financialization of the whole economy in India is creating informal to formal shift even at a small ticket unsecured loan book level, and you go higher up from there in terms of the ticket sizes, in terms of the profile of the borrowers, etc. There are several pockets where the banking infrastructure doesn't easily make business viability, which is where the NBFCs, they come in and offer greater value add to the borrowers through direct sales or through intermediaries, etc. And some of these NBFCs, particularly the ones that we have under our coverage and in our portfolios, they have developed an understanding of their client base from a first principles perspective, which is not based only on bureau data. They've got their own approach towards understanding which client to lend to. Take, for instance, Bajaj Finance as the best and the biggest example of an NBFC, which adds value to borrowers, to intermediaries, to shareholders eventually. So that's really the opportunity size here, differentiated offering versus banks.
Sure, differentiated offerings is what you're going for, and differentiated offerings even in IT, because I had a specific question. I see Tata Elxsi as well as L&T Tech in your portfolio, and there was a very interesting note from JP Morgan saying that the ER&D sector is set for a derating, potential downside of anywhere between 40 to 50%. You're on the completely other side of the spectrum.
We take longer term views. We don't take sort of 1 quarter, 2 quarter calls. When you look at the longer term view of how ER&D IT services is likely to evolve, the demand side is shooting through the roof as the way to run a business, the way to run infrastructure across various aspects of the economy of various countries around the world. It changes. It becomes more digital, becomes more tech oriented, whether it be auto, whether it be various other kinds of sectors. And hence the demand side is shooting through the roof. There aren't too many companies with scalable, high quality manpower to create solutions and provide them to cater to this demand. And we do believe that the 2 names you took, which are in our portfolios and in our coverage, they add far more value than many of their competitors. And hence, yeah, from a long-term perspective, we are quite comfortable holding on to them.
To have you then on the show, Rakshit. Glad that you could take time out and join in today.
Pleasure. Thank you.
Okay, that's the word coming in on the markets from Rakshit Ranjan. Let's take stock of what the market itself is looking like. We're holding on to the gains, still circling around that 19,450 print for the Nifty spot. Let me take it across back to our channels, Kunal and Naresh, and get in some closing ideas as well going. Kunal, what's on your list?
Well, to large cap names, Sun Pharma is something which looks attractive. In fact, we discussed this on the chart busters today, that how the stock is confirming a breakout of a major resistance around this 1,060-70 zone. That's a stock which looks very attractive on the charts and could probably be a potential candidate of a big breakout from current level.
Right. Naresh, what about your closing trades?
So that would be RBL Bank. The stock has crossed a new 52-week high, as well as the last time the stock was at 190 odd levels was back in 2021. So it's a major trend change momentum here. So they're expecting this to continue towards 220 levels in the short to medium term.
Right. Let's move on. And before we kickstart the earnings season officially tomorrow, brokerage firm Macquarie has come out with an interesting hits and misses report. What's the rationale behind the calls? What is it that they're bullish and bearish on? Colleagues Vinny and Lisa are waiting by at to tell us and give us a comprehensive picture on what their brokerage opinion is. Vinny, let's first go with you.
Absolutely, and let's start with what is going to be a hit this time. And first, from the banking space, you can see the name coming in, IndusInd Bank. They expect IndusInd Bank that it could actually positively surprise in terms of especially the lower credit cost. That is one thing that they see could be standing out for IndusInd Bank. Let's move on and talk about Indus Stars. That's the next stock that they've given a thumbs up to in terms of the hits that they believe. They believe the EBITDA net profit is at around 66% to 17%, which is above the consensus. They see a steady tendency as well as recovery in the EBITDA margins for Indus Stars, as well as the free cash flows is something that will be aiding higher than the consensus term of dividend as well. So that's the next stock that they've given a hit for. And other than that, we have Indigo in the aviation space that they're talking about, where they believe that they're expecting better than expected yields for your lower cost per available seat is something that per kilometer could be something that could be at a good level in terms of the Q1 as well. Talking about L&T, they believe that the company has actually guided for a soft H1 margin, but they expect the results to come ahead of what the street is expecting. Siemens also, they're talking about that they could surprise both in terms of the top line as well as in terms of the margins this quarter as well, mainly led by the strong execution that we could expect in terms of healthy booking as well as a 250 basis point expansion in terms of margins. The next one we'll talk about is from the auto space, and we have TVS Motors, is that what they are highlighting for a hit coming in, better product mix, quarter-on-quarter volumes. That is something that could aid overall at the margins of TVS Motors. From the discretionary consumption side, we have Asian Paints that they are talking about, and gross margins are supposed to give a positive tailwind over there, given that there are lower discounts as well as, let's not forget the commodity prices, that is a that is coming in over there as well. And Asian Paints is the next one that they are saying, especially a trigger for an EPS upgrade is what we could expect from Asian Paints. From the pharma space, we have Lupin. Solid results is what they're expecting, driven by competition launches in the US as well as uptick in the existing products, and that is the Lupin is another stock that they're talking about. And lastly, on the hits, they have Gale, that they're expecting a turnaround in terms of the EBIT for the company for the gas and transmission and gas marketing division as well.
Well, now let's see what features on the miss list of Macquarie's report. Starting with the heavyweight Reliance, they have said that the low refining margins, the slower recovery in the chemical business, as well as the lower EBITDA expansion in the geo business, that bodes a bit weaker for Reliance Industries, and the FY24-25 EPS is 15 to 25%. It's below the visible alpha consensus. Now moving on to Bharti Airtel. Stand fundamentally bullish for the stock, but for the upcoming quarter, they have noted a mild downside. This is on the back of consensus tariff hike assumptions as well as Africa earnings. They are expecting the Nigerian currency devaluation that will impact the African business. Now moving on to SBI Cards, while they have an outperform on the stock, the continued higher credit cost, that is a miss actually for SBI Cards, and this is despite the low revolver mix in the business. So that's a disappointment to the street. Moving on to the next one, it's Jubilant Food Works, and they see further cuts to the EPS street estimates on Q1 results, and this is because the sales per store that lags as per the peer, when it's compared to the peers, so it lags behind the peers, and that will be a further cut to the street estimates. Moving on to Concord, the below street estimates for the company, it's because of the weak EXIM volume as well as the negative operating leverage that will impact going forward for the company. As for BHEL, relative to the street forecast, that is 4% margin, Macquarie is seeing that is not achievable because the Q1 is expected to be soft, and that is actually it contributes 15% of the overall revenue. Moving on to Shree Cement, the company said that it actually will be a miss. The margin is expected to disappoint, and that is because of low price high consensus. As per the consensus, they are going to take a lower than expected price hikes. Moving on to Walters, the competitive intensity, the margin that is expected to be impacted for Walters. And on Alchem, they expect the results to be weak, and this is because there is no respite in the raw material prices, and that is for their anti-infective medicines. That is going to continue to be high, and it's also expected to impact the margin. And moving on to the last one, we have Info Edge. So Naukri performance, that is expected to be weak, and even there are other verticals that is expected to be around, that is expected to see continued losses, and also there is a scope for further write-downs on their investment. So that's on the misses list of Macquarie report.
Hits and misses that we can expect, at least as per the House of Macquarie. On that note, we're going to take a very quick break. When we come back, we'll chat markets with Vineet Walinchkar. Closing trades right here on ET Now. 19,485 thereabouts is where the Nifty futures are currently, higher by about 76 points. We've ebbed off a little bit from the day's spot top, but we're still clinging on around that 19,500 print. It's Tata.com that surged 6.5% in today's trading session. Polycab, of course, has been going very strong. 5.5% uptick coming in there. India Mart, RBL Bank, IDFC First. These continues to be the broader market winners, and which, by the way, are actually outperforming by way of an advance count as opposed to declines, at least within the F&O universe. About 54 to the red, to about 135 to the greens. Naveen Fluorine, Deepak Nitrite, UPL, Bandhan Bank and Atul Limited are some of your prominent laggards from within the F&O universe. Promise, let's chat a little bit more markets with Vinit Bulinchkar. He joins in on the show right now. Vinit, we've been asking our experts as to, in this kind of market wherein we are almost close to that all-time high and, you know, on a daily basis clocking a new peak, barring the last two trading sessions, where do you think in this market are pockets of overvaluation, and which are the pockets which you still think are undervalued?
So let me start with the undervaluation, because that's what people would like to hear. I believe that the PSU banking space is going to surprise the markets. They're doing very well. Advances growth is going to be between 15 to 18%. Earnings growth is going to be anywhere between 20 to 25%, and ROAs are also picking up. So they're going to, catch up with their counterparts, that is the private sector banks. So I believe there's significant undervaluation in that sector. We like the metal stocks, particularly Lloyd Metals. We believe that that stock has got significant upside potential. In the housing finance space, we like PNB Housing. We believe that stock has got potential to re-rate by 40%. We've seen significant, activity, corporate action taking place, and we believe that the asset quality will improve and growth will pick up. They recently did a rights issue where they've raised growth capital. So I think that stock is one which is firing on all cylinders. I believe that the overvaluation is going to be in the IT stocks. The IT stocks are not performing as expected. And with the fiat dollars days almost numbered, I believe that that sector is going to take a very big whack. And investors, who have been buying these are going to be in for rough times going ahead. So personally, I'm recommending all my clients to stay away from IT pair holdings and push into your domestic themes. I believe that the electrical space, especially the transmission space, offers very good value. PGCIL looks very good, and there's going to be a lot of ordering of almost 78,000 crores of orders are going to be executed. We like the renewable energy space. NHPC looks very good. I think that stock will come of age now. So these are some of the stocks and some of the ideas that we have currently.
Interesting, Vineet. You talked about NHPC, and we just spoke with the management earlier in the day. They are talking about how the capacities and profits will double over the course of next 5 years. Quickly, let's listen into that bite coming in from NHPC, and then we'll discuss the IT earnings lined up tomorrow.
Our Subansiri Lower project is the biggest hydro project of country. Its capacity is 2,000 megawatt, and we are planning to commission 2 units of this project in December 23, and rest of 6 units will be added in the calendar year 24. So full capacity will be added by December 24, and full year financial benefit will be available in FY 25-26. Power 2 project has completed its 99% work. Only 65 meter of tunneling is left out, and 3 kilometer of concrete lining is to be done. So as per our plan, we will daylight the tunnel in by August 15th, and project will be commissioned in March 24. After commissioning of Power 2 and Subansiri, our regulated equity will be around 24,000 crore. And in next 5 years, our capacity will be double. At present, we are 7,000 pump storage projects. We are exploring around 20,000 megawatt capacity. And out of that, we are sure that in next 2 years, we will start at least 3-4 projects with the installed capacity of 3,000 megawatt to 4,000 megawatt.
Okay, so that was a comment coming in from NHPC. Quickly, let me talk about the IT sector as well. While Vineet is saying stay away from the sector at this point of time, let me just run you through the expectations from the earnings tomorrow. TCS as well as HCL Tech. Quickly about TCS, the expectation and the range is quite wide. But on the consensus, we're expecting a constant currency growth of anywhere between 0.2 to 0.4% sequentially. The rupee revenue is expected close to be 60,000 crore rupees and the bottom line should be close to 10,900. On a sequential basis, yes, there'll be a margin decline of anywhere between 100 to 120 basis points, but that's seasonal because the wage hike impact comes through. But the good news is that the deal wins will be very, very strong. In fact, it could be double digit because they signed that big, almost a $2 billion deal with BSNL. There was that Nest deal that they signed, Marks and Spencer. So a lot of deals were signed. So that should be all right. The biggest question, of course, is going forward. What does the deal pipeline look like? What's the incremental commentary coming in on demand? And what's the strategic initiatives that the new CEO at helm, Mr. Kriti, will want to take going forward will be important. There was a buzz of a buyback as well. Most likely shouldn't happen now because they have not intimated the stock exchanges as of now. But nonetheless, we'll watch out for that. Quickly shifting focus to HCL Tech, wherein the biggest thing that I'll watch for is the fact whether they change their guidance or not. They talked about a 6 to 8% growth on the top line for FY24 with a margin of 18 to 19%. Do they hold on to that or not? Will be crucial, and of course the commentary coming in going forward because it's a ER&D segment which continues to be sluggish. IT services has been all right. The TCV is expected to be flat, but I think the guidance will be the key for HCL Tech going forward. So a couple of these companies is what I'm watching out for, Aisha.
Right, okay, that's what to expect from the two IT majors, that's TCS as well as HCL, when they report their numbers, both after market hours, right?
Yes, sometime between 5 to 7, both should come, and then we'll get the barrage of economic data as well with CPI, IIP and CPI of US as well at the same time.
What else? That's it?
What else? There are a lot of AGMs. There's Wipro AGM tomorrow that I need to watch out for. So it's going to be a busy day. And not to forget the IPO action.
I'm talking about at large. What do we
So then let's include the
to...
IPO action as well. There's Utkarsh, small finance bank, which is open for subscription as well. So yes, lots lined to watch.
Okay, so it's going to be quite the hectic day ahead for all of us tomorrow, not just Anisha, but yeah. Midweek, what else can you expect? Just tracking some of the market movers, and today it's actually pharmaceuticals, a bunch of these auto names. I should actually have seen a decent recovery, holding up 2.5% right now. Still got a long way to go before it undoes the damage that it saw from past week with the new launches around Hero as well as Bajaj. Apollo Hospitals, Maruti, Titan is rebounding after that dip today. And then, of course, there's Tata Motors, L&T, Infosys, etc. also, which are holding out in trade. But the other one in focus also is going to be the mega bank merger, HDFC Bank, which is all set to dethrone Reliance as the new Nifty heavyweight mogul. In fact, what does this really mean for the company's financials going forward? Harsh has been data crunching and he joins in with some interesting inputs.
Right, so the record date for HDFC Bank shareholders, or rather HDFC Limited shareholders, to receive shares in HDFC Bank is the 13th of July. So the last date for purchase of HDFC Limited shares, if you wish to therefore receive HDFC Bank shares post the merger, is tomorrow, which is the 12th of July. Of course, based on the merger ratio, around a 0.5% gain if you are buying HDFC Limited versus HDFC Bank as of today, as of market prices. Let's talk about the merger ratio itself. If you hold 25 shares in HDFC Limited, you get 42 shares in HDFC Bank. So 1:1.68 is the merger ratio. Let's quickly move on. It will, once the combined bank goes through, it will be the 4th largest bank in the world, behind the likes of JP Morgan, the Industrial and Commercial Bank of China, and behind Bank of America as well. So the top three, those three in terms of market cap, this will be the 4th largest bank in terms of market cap, roughly 15 lakh crore odd. You're also looking at a book which is more than twice the size of an ICICI Bank, which is the next largest bank after SBI and HDFC Bank domestically in terms of loan book size. 22.5 lakh crore is the loan book size of HDFC Bank, more than 8,000 branches and more than 10 crore customers, which the bank on a combined entity level, including all the subsidiaries, will have. So 10,000 plus customers. You're also looking at what will happen in the F&O space. 12th of July will be the last date with regard to contract expiry on HDFC Limited. All the F&O contracts will expire on that date. Also, in terms of what's happening with regard to sectoral indices, HDFC Bank will have a weightage of 14.4% on the Nifty, around 29% on the Bank Nifty, and LTI Mindtree will replace HDFC Limited. Around 0.5% is the weightage given to LTI Mindtree on the Nifty. Where the Sensex is concerned as well, JSW Steel will replace HDFC Limited on the Sensex index, and 0.9% is the weightage ascribed to JSW Steel on that substitution happening. Broadly, HDFC Bank in focus. If you want to buy HDFC Limited shares, tomorrow is going to be the last day.
Thanks so much for that. Let's toss the question across to Vineet as well. Vineet, your take as far as the fate of the big HDFC entities concerned from tomorrow onwards?
Super bullish. I think that stock has been performing very sideways to downtrend, and it just reversed its trend from those 1600 odd levels. Did a correction from 1750 and consolidating now. I think from tomorrow onwards we will see investors file into the bank, because now the focus will be on the growth metrics. And I believe that as the year pans out, we will see HDFC along with HDFC Bank, has tremendous strengths now, cross-selling, new clients, new products to offer different people. So you will see the cost to income come down, because you have such a large base of cross-selling opportunity that is available. And that will be one metric to watch. And I believe that the bank will continue to do well.
Okay, Vinit, great to have you on the show. We'll let you go on that note. Let's quickly get in some BTST trades as well, going loose out on Lupin. They've got an EIR from the US FDA for their Pithampur Unit 2. We'll just bring up the stock price as well for you on the trades. It's cooling off a little bit as we speak right now. But in the meantime, Naresh, anything that you've identified for a BTST trade?
So first would be a buy on RBL Bank, new 52-week highs here, good momentum. Stop loss at 191, target price of 200. Second is a buy on Sun Pharma, another stock with a 52-week high and a 6 to 8 month breakout. Stop loss at 1058, target price of 1100.
Right. Kunal, what about your BTST ideas?
So the first one is around Sun TV, very strong turnaround for the stock over the near term. So expecting a very strong up move for Sun TV over the near term. 494 as a target, stop loss 464. And the second would be on KEI Industries for a target of 2250, stop loss at 2280.
Okay, so that's the take coming in as far as the BTST ideas are concerned, but it's last 2 minutes of the trading session left. So let's quickly take stock of all that transpired today. Of course, the entire defense pack was quite active. There was Bharat Dynamics, Moscow Dock, Cochin Shipyard. They were up anywhere between 10 to 15%. You saw quite a bit of spike on Nykaa actually by the end of the trading session. Let's pull up that counter, 6% higher. Kalyan Jewellers too, 7% higher. Quickly, Naresh, if I can get your view on Nykaa and Kalyan Jewellers.
So Nykaa looks interesting, making a bottoming out phase out here. It needs some more time. So it's spent almost 5 to 6 months as of now in this range. Another couple of months and it would be very similar to what happened with the rest of the new age space. And 160 is the price point where the trend changes to positive.
And quickly, just let's take stock of Lupin as well. My colleague also, Shrishti, is pointing out that what Aisha talked about, the the that they've got on one of the facilities is quite important. So EIR is actually what they've received from US FDA for its Pithampur unit. So that's something to watch out for as far as Lupin is concerned. And that's going home with a gain of almost 2%. So that's one of the stocks to watch out for. But separately, as far as the day is concerned, we are closing in just around that 19,450 mark. The advance decline ratio has been positive. Yes, the banking stocks were under a bit of a pressure, Aisha, but autos pretty much made up for that.
Yeah, autos clearly did. While we managed to fall about 90 points off the day's highs, autos definitely were the saving grace. In fact, by the way, at the peak of the day, the Nifty was only 20 points shy from its all-time high, with names like Bajaj Auto at a 52-week high, Apollo Tyres, and remember the entire tyre sector has been in a very good stead. all through last week. Today was no different. That stock held out smartly. There was Bharti as well, which is now at a 52-week high. We were talking about the entire defense pack, so Doc, others like Kim's, Elcon Engineering, CG Power, Minda Corp, PFC REC. These were all stocks which continued to hold out at their 52-week highs. But on the slip down as well, we were talking about that FMC guidance card. So UPL, for instance, that was a laggard in trade and closed in at its 52-week low, along with some of the other names. Today, of course, the star power or the star performer was really with Tata Com. A 7% surge is what the stock has closed in the day with. But that's pretty much time that we have on this edition of Closing Trades. Thanks for watching.